Good day. This is Peter Kniff from Castlestone Management with comments on the U.S. markets for the week ending January 29th. Volatility has returned to the U.S. indices as investors worried about inflation kept an eye on rising tensions in Ukraine and sift through earnings reports. It took a rally late on Friday to save the averages from another negative week of performance. The S&P 500 finished the week up 0.8% at 4,431.85. The Nasdaq recorded a 0.1% gain to save the week. The Dow Jones scored a 1.3% weekly increase. However, the Russell 2000 index fell 1% on the week to close out its fourth straight week of losses. Small caps are struggling with rising interest rates and borrowing costs. The two-year Treasury recorded its biggest weekly gain since October, and the yield curve continued to flatten last week. The yield on the two-year note was up 17.7 basis points on the week. The 10-year note yield climbed 3.2 basis points, and the 30-year bond was up 2.1 basis points. The dollar index climbed 1.3% as investors believe the FOMC will raise interest rates in March. That comes after comments by Fed Chairman Powell midweek. Gold prices posted their lowest finish in 6 weeks as the dollar climbed on the expected March interest rate hike. Gold prices fell roughly 2.6% for the week. Oil prices recorded a sixth straight week of gains on rising tensions in the Ukraine, which continue to put pressure on tight supplies. West Texas Intermediate crude scored a 2% weekly gain. Thanks for listening. Thanks for doing business with Castlestone. Continue to stay invested in the market as this too shall pass. Thanks.